If you blinked in the last 5 weeks, you might have missed the most insane volatility we have seen in a mega cap stock in years. We are barely into 2026, and Novo Nordisk is taking shareholders on a nausea-inducing ride. We started the year skyrocketing 30% plus thanks to the new pill launch in the end of 2025, only to crash 32%, dropping 26% in just 3 days. Why? Because despite beating earnings, management dropped a bombshell. 2026 revenue is guided to shrink by 5%. The market panicked. But wait, late last week, the FDA just stepped in with a game-changing announcement that decimated copycat competitors like Hims and theirs. Is this the catalyst that sends Novo back to fair value, or is the growth story broken? Today we are crushing the numbers. Welcome back to MoneyJourney. If you want to navigate this volatility with confidence, make sure to smash that subscribe button right now. Let's cut to the noise. Novo Nordisk still possess one of the widest moats in the market. They are the kings of diabetes and obesity care. The optimism early this year was driven by their new oral weight loss pill and sales that beat expectations. So, why the 26% crash? It comes down to pricing power. Management's guidance for mid-range 5% revenue decline in 2026 shocked Wall Street. They are slashing price to drive volume, and the market hates margin compression. However, the narrative shifted drastically on Friday. The FDA announced decisive action to restrict GLP-1 active ingredients in compounded drugs. Essentially, they are cracking down on the off-brand versions mass marketed by compounding pharmacy. We saw immediate fallout as Hims and hers, tanked 16% after hours. This is massive for Novo Nordisk. It reinforced their patent protection and forced patients back to the official FDA approved supply chain. While the market is fretting over lower prices, the FDA just secured Novo's volume by eliminating the green market competition. This regulatory moat might be exactly what stabilized the stock. Novo Nordisk's business is facing a lot of headwinds right now, from Eli Lilly's competition, from copycats trying to do GLP-1 compounded version at cheaper price, like for example Hims and theirs, and most recently US administration trying to slash prices of Novo Nordisk drugs, and Novo Nordisk had to negotiate that price, which will incur on lower revenues next year and lower profits. That have created a lot of bearish sentiment on the investors, and for good reason. But right now, is this sentiment overdone? I do believe so. If you want to know more about Novo Nordisk's business, you have to watch our previous video on Novo Nordisk, where we do an in-depth analysis of this company. But right now I'll go to our MoneyJourney checklist, looking at the fundamentals we believe that are most important to analyze in a company and valuation right now, to see if this company is a falling knife or if it is actually a deep value investment. Starting with revenue, they've been growing a lot. It was a growth company. They've been growing revenues around 18% per year. And next, what is the market prospect? Analysts are expecting EPS growth of 2.2% in the next 5 years. So that's really low growth for a company that used to grow EPS above 20%. That means they will face a lot of pressures in the future, mostly due to our price and competition. The good news is FDA at least is going around the companies that try to conturn their patents like Hims and theirs, so that's one good news. But have to slashing price in US and have a lot of competition from Eli Lilly. Of course, that's bad news for the company, but they are still looking to grow year over year, even though 2026 will be a negative growth for the company. That's a bad case. In terms of their quality of their revenues, they are very recurring. If you look to the graph of their revenues, we see 2026 expectation to go lower, but then they resume growth. And I believe Novo Nordisk has a lot of potential to grow in the future, not only with weight loss pills or weight loss drugs, but even diabetes. Population around the world is eating worse than they used to. Percentage of people with diabetes is increasing. So only with diabetes, which is a larger percentage of their revenues, they expected to grow around 10%. GLP-1s is that cash cow that increase their margins, and they have growth above the mean, I would say. That will face a lot of headwinds since prices will have to go down, so lower profit margins, and then a lot of competition. But at least if they can use their patents until 2031 and have the monopoly with Eli Lilly, at least that will be a cash cow for the next year. So that's good news, and I really believe the potential of Novo Nordisk because of that. So I'll say their revenues will be very recurring, and I expect them to grow revenues not next year, but after that between 6 to 10% very easily. They have been developing new drugs, have an historic return on invested capital very high for Novo Nordisk, so they are very good in their R&D department, in my opinion. Looking at these margins, high gross margin of above 80%, profit margin, free cash flow margin above 30%. This is a wide moat, so they have been pouring money into the business, selling drugs that are there are a lot of demand and at higher prices. So, but I don't know what to expect for margin in 2026 and after. So in US they have to slash their prices, so they will lower their margins. But after that, I expect them to continue to grow because demand, diabetes will not be solved. There are plenty of people and more that's growing the demand for diabetes care. And in terms of weight loss, it's getting to more people, and with these slicing prices, that's true. When that happens, when technology deflates, the demand goes to the roof. So even though we are seeing the prices going down, actually the price for weight loss drugs were very high. With these slashing costs, it will be getting to more and more people. So what we'll get, it will be a trade-off. We have higher margins but lower demand, but with increasing demand, lower margin will be lower, but profit margin will maintain or even go higher. That is what happens when you lower the cost of technology, drugs, or even food. When the price goes like lower and makes it more accessible to a bigger percentage of the population, the demand goes through the roof, and that could be a bull case for Novo Nordisk. In terms of that, they up until now they've been maintaining their profit margins very well, gross margins above 80%, being free cash flow positive, even though they now are investing a lot. So that's why free cash flow margins are lower, but net income still very high margins. Looking for the rest, pricing power, yes, they will have it, even though they are negotiating lower prices. They could buy their debt with only 1 year of free cash flows. On returns on equity and on invested capital really high, above 50%. Management, that could be, I believe that's very good, even though they are changing CEO. But the track record, the historic track record for R&D development, CEOs have been very good, and Novo Nordisk has been growing a lot. But now there are a lot of uncertainty, so I don't know I should place it that. But they have a wide moat. Diabetes care, they are the leader. GLP-1 and weight loss drugs, they are still the leader, even though they are facing a lot of competition. And Eli Lilly is going faster than Novo Nordisk. But they've been growing free cash flow per share above 20%, which is very good. And they've been returning plenty of capital to the shareholders. Right now they are paying a dividend of 3.6%, and they have been buying back shares at like 1% per year, which is very good. So is it cheap? Definitely. I don't need a discounted cash flow to know that. Is it a good business? Incredible. They changed the CEO that's trying to put the company on track. They face a lot of problems since competition, slashing costs or slashing price of their drugs, and copycats, compounders. But I do believe in this investment we have the three sources of returns. We can see revenues and earnings grow, even though they will face some difficulties in the next few years. We can see a PE expansion, and we see them to return capital to the shareholders, doing buybacks and dividends. So let's do our discounted cash flow analysis. For that, it is a Denmark company. the business risk, I would say it's medium because of their competition. And now we have talked before, so my discount rate for this company, it has to be around 12.5%. For them, I will assume them growing only 7%. Bear in mind, it was a company that was growing almost 20% per year, but I'm expecting them revenues to slow 5% in 2026 and 2027 to grow around 6 to 7%. And after that, I believe the company will grow 7%. Demand for diabetes, long-term prospect, it's around 10%. GLP-1, they are the leader now on the oral pill for weight loss that is being very successful up until now. So I believe they deserve a 20 PE because they are growing, they have high returns on invested capital, good margins. So it is an above average company and one of the best in this sector. So in terms of margins, I expect them to slow down. They've been having free cash flow margins or net income margins around 33% on average, 31% on free cash flow because they are investing now. So 32%, maybe 30% margins. It's not. I believe they can go between 30 to 35. So that's my assumption for my base case. With this, I came with an intrinsic value of $85 per share. Right now, the stock is trading $47, so almost half of my fair value, which I believe I'm using a higher margin of safety because of I believe there is a medium risk to this business because they are facing a lot of competition, and I don't like that. But besides that, this is a company that has great fundamentals, an incredible business model, that has an historic track record of being one of the best, if not the best, in this drug manufacturing market. So I really like the company, is one of the leaders in the world. So I believe this is a great company, and it has an incredible fundamentals and quality score. So, and we don't usually see them trading at almost 50 cents on the dollar. So I believe even though being having a lot of margin of safety, the fair value will be between $80 to $100, and I'm being conservative. If they restore growth, if they increase their revenue growth and their profits, I believe this is a $150 company. But that's just my opinion. I'm trying to be conservative here, and right now, even being conservative, this Novo Nordisk company is trading at a big discount. So where does this leave us? We have an incredible business with fortress fundamentals, currently priced as if growth is dead. The market is pricing in the fear of that 5% revenue drop, completely ignoring the long-term strategy of volume compensation and the new protection coming from the FDA crackdown. The valuation suggests investors have zero expectations for Novo Nordisk right now, which is usually where the best opportunities are found. But I want to hear from you. Is the FDA news enough to save the year for Novo Nordisk? Or are you staying away until guidance improves? Let me know in the comments below. If you find value in this analysis, please like and subscribe to MoneyJourney so you don't miss our next update. I'll see you in the next video.